What's happening, Trendix fam? Get ready for a lightning-fast rundown of the hottest market movers. We're diving deep into Mirum Pharmaceuticals' incredible Q2 earnings, surge, and their boosted 2025 guidance. Then we're dissecting CoreWeave's wild share price swings and what they mean for valuation. Next up, Coeur Mining is making waves with brand new exploration results and resource expansion. And finally, DiamondRock Hospitality is in the spotlight after some significant share gains. Stick around, you don't want to miss this. Hit that like, subscribe, and ring the bell. Mirum Pharmaceuticals is soaring after a massive Q2 earnings beat. Mirum Pharmaceuticals just dropped some seriously impressive Q2 results, blowing past expectations and showing a massive 64% year-over-year revenue jump. They didn't just stop there. The company also raised its full-year 2025 guidance, signaling serious confidence in their trajectory. This surge comes after a year where Mirum shares have already climbed a staggering 81%, with recent momentum pushing them up nearly 47% in just the last 3 months alone. Investors are buzzing about the completion of a key drug trial enrollment and news of employee stock offerings, all contributing to a market that seems to be reassessing Mirum's growth potential. The big question now is whether this incredible run means Mirum is still undervalued, or if the market has already caught up. Most analysts believe Mirum is still modestly undervalued, pointing to an expanding patient population for their therapies, driven by increased genetic testing and disease awareness. They project sustained top-line revenue growth fueled by these factors. The valuation seems to hinge on rapid revenue acceleration and a profit trajectory that could soon outpace the industry. Our analysis suggests a fair value of $78.27, indicating it's currently undervalued. However, it's not all clear skies. Heavy reliance on one key therapy and the potential for tougher competition or regulatory changes could pose risks. While our DCF model also points to undervaluation, it's crucial to consider all angles. Public reaction has been overwhelmingly positive, with many investors seeing this as a prime opportunity to get in on a biotech company with strong fundamentals and significant upside potential. Analysts are highlighting the company's ability to tap into a growing rare disease market. But is this growth sustainable, or are there hidden risks? Find out what's next for Mirum Pharmaceuticals and if the market is truly ready for what's coming. CoreWeave's valuation is under the microscope amidst recent stock fluctuations. CoreWeave's stock has been on a roller coaster lately, with shares jumping nearly 12% in the past month alone, reversing a 3-month loss. Year-to-date, the performance has been even more dramatic, with shares nearly doubling, suggesting a renewed optimism in the company's prospects despite recent losses. This volatility, without any major news catalysts, has investors questioning what the stock is truly worth and whether it's the right time to buy. CoreWeave currently sports a price-to-sales ratio of 16.5x, which looks expensive compared to the U.S. IT industry average of 2.7x, but is more favorable against its peers at 22x. This high P/S ratio is often seen in fast-growing tech firms, where top-line growth is prioritized over immediate profitability. The key question for investors is whether CoreWeave's strong revenue growth can justify this premium multiple, and if that growth will continue. Our analysis indicates a fair value of $217.65, suggesting the stock is undervalued. However, any slowdown in revenue growth or persistent net losses could quickly shift sentiment and challenge this valuation. Our DCF model also points to undervaluation, but it's vital to consider all potential risks. Investor sentiment appears to be cautiously optimistic, with many intrigued by the company's role in the Gen AI space and its rapid revenue growth, while others are wary of the high valuation multiples. Can CoreWeave maintain this blistering pace, or is a correction on the horizon? Discover the hidden factors influencing CoreWeave's volatile journey and what it means for your portfolio. Coeur Mining strikes gold with new exploration results. Coeur Mining is making headlines today with exciting updates from its Las Chispas and Kensington mines, revealing high-grade gold and silver intercepts and significant resource expansion. Drill results like 4.61 ounces per ton of gold and 392 ounces per ton of silver at Las Chispas, plus new mineralization zones, have investors buzzing about a potential turning point for Coeur's growth. This exploration success follows a stellar year where Coeur Mining's shares more than doubled, soaring over 150% year-to-date and over 110% in the past 12 months. The momentum continues, with the stock up nearly 33% in the last month alone. Investors are clearly repricing the company's risk as these fresh discoveries and an accelerated drilling program fuel optimism. The big debate now is whether Coeur Mining is still trading at a discount, or if the market has already factored in all this future growth. The prevailing narrative suggests Coeur Mining stock is trading above its estimated fair value, with analysts setting a consensus price target below the current share price, despite impressive operational momentum. The successful integration of the Rochester expansion and Las Chispas asset is driving significant increases in gold and silver production, positioning Coeur for robust revenue and earnings growth. Our analysis, however, indicates a fair value of $13.08, suggesting the stock is currently overvalued. This contrasts with our SWS DCF model, which points to undervaluation. Potential regulatory hurdles or unexpected shortfalls in exploration results could challenge these optimistic forecasts. Market reaction has been mixed, with some celebrating the exploration wins and potential for significant returns, while others remain cautious about the high valuation and potential headwinds. Could these discoveries unlock massive shareholder value, or are the risks being underestimated? Get ready for the next big mining play as we shift focus to a hospitality giant with surprising gains. DiamondRock Hospitality shines with recent share gains and an optimistic outlook. DiamondRock Hospitality is capturing investor attention following notable share gains, with the prevailing valuation narrative seeing the stock as moderately undervalued. Analysts are pointing to significant future catalysts, driven by accelerating urban and bleisure travel trends. The company is strategically positioned to benefit from strengthening group and business travel demand in urban markets, with a higher group revenue pace for 2026 and an improving corporate booking environment expected to boost occupancy and earnings growth. The optimism surrounding DiamondRock's value is fueled by a powerful combination of rising profitability and resilient revenues, a growth trajectory that could surprise many investors. The core driver analysts are counting on is a specific forward-looking financial assumption that promises to unlock this valuation gap. Our analysis suggests a fair value of $9.14, indicating the stock is undervalued. However, persistent softness in leisure travel or ongoing cost pressures could challenge this optimistic outlook. Our SWS DCF model also indicates undervaluation, but it's essential to investigate potential hidden risks. The market response has been largely positive, with investors drawn to the recovery in the travel sector and DiamondRock's specific strategic positioning in key leisure and urban markets. Will DiamondRock Hospitality continue its upward trajectory, or are there storm clouds on the horizon? That's all for today's deep dive, but don't go anywhere. We've got a rapid-fire recap coming right up. And that's a wrap on today's market movers. Mirum Pharmaceuticals is crushing it with boosted guidance after strong Q2 earnings. CoreWeave's valuation is hot despite wild price swings. Coeur Mining is digging up excitement with new exploration wins, and DiamondRock Hospitality is checking in with solid gains and an optimistic travel outlook. Don't miss out on the next wave of market insights. Smash that like button if you found this valuable, subscribe to Trendix for your daily dose of market intelligence, and hit that notification bell so you never miss a beat. Follow us on all social platforms to keep the conversation going. We'll see you in the next one.